All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for the market bias update report for the trading week ahead of Sunday, June 2nd. Diving right in before we get to the charts, want to share progress from last week. I basically took almost the entire week off last week to do some other things. You can see I didn't have any trades on our futures that has been the major part of my trading for the better part of this year. Most of my trading has been focused on futures, and I did not close any out this last week. So nothing to report on futures. If we go over to Trade tab for options and stocks, you can see here I had two trades that I closed out, one for about $770 worth of gain and one for just over 1,000. Total for the week came out to 1793, so not bad. And if you see right here, you might be wondering what in the hell this is. This is the profit and loss column as a percentage for the trades that I take. And you'll see that I had a trade that I gained over 20,000% on a single trade there. And that is basically because this is a specific, very aggressive option strategy called a long synthetic, where you're doubling down basically a bullish call option plus a bullish put position. And you can see I entered the trade with the cost of 1 cent and then ended up closing it out for $2.06 per contract. So made $2.05 on a 1 cent investment. So not too shabby. But going into this week, so now that we've gone through and looked at our trading performance from last week, let's talk about the trading week ahead. Last week in our video, I basically said I think this is a development week. I was not liking what I was seeing at the top end of the chart there, and basically just said I think we need some development. I'm not super bearish. I'm not super bullish. Honestly, nothing has really changed for me looking at the week ahead. Last week, we didn't have a whole lot of economic data that was going to be coming out that I thought was going to impact the market heavily one way or the other. This week, we do have a significant slate of data pretty much every day of the week, Monday through Friday. We at least have some kind of known big economic data that is coming out. Of all of these, honestly, the one that I am kind of keen in the most to is going to be Friday's average hourly earnings and unemployment rate. For those not familiar with average hourly earnings, this is kind of one of the first looks each month that we get into the rates of inflation specific to jobs and earning potential. So people's take-home pay. And obviously that impacts consumer spending and that impacts the entire market. So this is going to be probably the most important economic report this week. Our manufacturing PMI data and services PMI data will be important, but probably not rocking the market one way or the other. In terms of unemployment claims, we have seen a little bit of stability in unemployment claims, so I'm not expecting a huge change there. Our unemployment rate has been ticking up a tiny bit over the last couple of months, and not a huge deal, but the market could see that as a opportunity to think that the Federal Reserve might cut rates sooner than later. I'm not on that camp. I don't think we're going to get more than maybe one rate cut still this year, and that is a big maybe. I don't think the Federal Reserve is in any rush to cut rates, and I think they are starting to honestly get a little bit more concerned with the idea of stagflation, basically inflation sticking around for a little bit longer than we would like to see it. And if inflation doesn't keep coming down and it gets stuck at a higher range than that 2% mandate for the Federal Reserve, that is not good. And that would likely prompt them to actually bring rate hikes back onto the table. For now, they have taken that off the table and said that they are not expecting any more rate hikes, but they're still using the same mantra of higher for longer. We're going to stay. We're going to be data dependent. We're not making any changes. As of now, I'm taking that for face value. I do not see a cut coming anytime soon, and I don't see a rate hike coming anytime soon unless stagflation starts to set in. So anyways, summary for economic data. The average hourly wage earnings is going to be what I am really looking for in that. And then since we're here, might as well go ahead and do the heat map before we dive into our chart analysis. So for those that aren't familiar, this is a heat map from FinViz, and we are looking at a 1 week performance. So this is giving us the kind of snapshot of the overall market. Where is money moving into? Where is money moving out of? And you can see that we had been running the coattails of tech for a lot of this year and late last year. And tech has started to sell off and weaken significantly. Semiconductors and software, communications, hardware, Microsoft, Oracle, Adobe, Avgo, even Google and Amazon starting to weaken significantly. I think this is top of the market problems. I don't necessarily see this as oh shit, we need to go sell everything and protect our portfolios. But I do think that as we see these areas of the market cool off and take a breather, and start to pull back a little bit, I do see a continued pullback in these areas for a little while. Not overly aggressive, but I think we are going to see money flowing out of those and people taking profit in those areas of the market. And that money has to go somewhere. So it's either going to go sideline and sit in cash if people start to get worried, or it's going to rotate into other areas of the market. I am very interested in energy. I'm very interested in basic materials and utilities. And to a lesser degree, insurance and a couple of the banks, although banks is kind of a mixed picture here. You can see a lot of the financial sector is under pressure, while other components of it are doing okay. So that's kind of a mixed bag. Going into this week, really, my focus is going to be looking for stability in the energy sector and potentially looking for some plays to pick up some shares in good energy stocks if crude lights futures chart stabilizes. And then utilities has just been on a tear. It's really overextended basically just as a group, so I'm not super interested in playing that. So likely this is going to be another development week where there is not a whole lot of action. I will always be in front of the market because I love it. It's what I do. I enjoy every moment of it. But there's a good chance that I'm going to be sitting on my hands a lot this week and probably not being very aggressive with any positions that I take. I will probably be scaling back position sizes because I just don't think we are in a place in the market where we are going to see big moves in one direction or the other. You can see here on the S&P 500 futures chart as we dive into our actual charting that I have two alerts set, one at all-time high and one at the wick low here from Friday's wick low, just under the 50-period moving average. We are still overextended on our RSI, and our RSI is actually signaling potentially some selling to come. Our MACD is still in positive territory, but has crossed over, so it is leaning a little bearish on the crossover, but still in bullish territory, so it's kind of in a neutral stance. And overall, the price chart to me, it looks like we ran off the lows after breaking down our support. We reclaimed that, we reinitiated the uptrend, and now we need some consolidation here and we need some time off. So this week is going to very likely be a development week where we see prices just kind of ping back and forth between these two lines that I have set on the chart, upper end being 53.68 and lower end being 52.05. So on the S&P, that is kind of my analysis going into this week, is we are likely going to be range bound, and a breakout on one side or the other of that is probably going to be very heavily dependent on the economic data that we get coming in this week, and also on what the US dollar does. If the US dollar breaks higher, that will put pressures on equity markets, and the market will likely move towards the lower end of this range. If the US dollar breaks down and starts moving lower, that will actually aid the stock market and futures markets. We might see it press back up into the upper range and consolidate up there for a little bit and try to line up another breakout for next week. But that is my base case for the S&P. If we go out to the Nasdaq, similar story, but I'm actually seeing the Nasdaq as slightly weaker right here. And you wouldn't necessarily notice that in the chart, because whereas in the S&P, we have broken out from these highs. Let me get my drawing tool real quick. We've broken out from the previous highs here and are now consolidating just shy of it. Whereas on the Nasdaq, we actually had set a new all-time high and are trading basically right at that level. So on a first glance, this might look like it is a little bit stronger, but I do feel like there is money that is starting to rotate out of the tech sector for the short term, and that is likely to cause a little bit more weakness here unless some of the big dogs can step back in and take charge once again. Now, moving out to the Russell. I am actually a little more interested in the Russell and small cap areas of the market right now, mostly because they haven't participated in a lot of the movements that we've had over the last year. You can see on the previous chart for the S&P, and I'll bounce back to that again here real quick, that we have had a big move up. This is the year mark. So from right here was January until now, we are solidly higher, and we've been pushing and setting new all-time highs regularly over the course of the last 5 months. Whereas if we go out to the Russell again, here's our January mark. We are barely above where we opened the year. It is basically a break even so far for the year. We've just been bouncing around in a wide range, consolidating, going back and forth, hard to pick a direction. And I do think that if we put this out to a weekly chart, it cleans up a little bit, and we can actually see our moving averages curling up, smiling at us. Our 9 EMA is acting as support currently. We had a little bit of a pullback into the 20, found support, and now we are looking for some kind of confirmation higher. So if we do see some strength come into the market this week, I have a feeling that it might be in the Russell 2000 area in some of the more beat up stocks that are still high quality stocks, but just have not participated because they haven't been the big tech names. They haven't been the gold related instruments that have been on a tear recently, things like that. They haven't participated as much. So they still have relative value compared to the overvalue at the top end of the market. So I'm interested in keeping an eye on the Russell 2000. Going out to the Dow Jones. Let me clear out my drawings. Not super interested in the Dow Jones. This is on a weekly chart still. We have broken down below a couple of our moving averages here, and they are actually starting to roll a little bit. So we need to see some development and see this clean up and reclaim that on the weekly. If we go out to the daily chart, you can see that we are actually below most of our moving averages on the daily chart and showing a bit of weakness. This can clean up really quickly. Last time we were down in this area, we did see it clean up and break back out above that very quickly. So not saying that we can't pop back up and retest these highs and consolidate for a while, but just a weaker look. So I'm staying away from this area of the market for the week ahead. Now, moving out to Bitcoin. Bitcoin is in a very interesting spot, and let me clean up the chart here. Hold on one second. There we go. Make that a little bit easier to see. So we've been in this consolidation period basically since the beginning of March, and still in the consolidation zone. I do like that we are seeing the 20 reclaim the 50 SMA here. That is a tell to me that if nothing else, we at least have stability at this level, and I'm not super worried about a sell-off in this area. I do think that the lean has to be slightly to the upside. But we are looking for a breakout and close above this diagonal little wedge pattern that we have been forming here. That is going to be our go signal. So really, I want to see prices get back above basically just shy of 70,000. If we can get back above 69,670 on the futures market, that would be super, super constructive. I'm not going to feel bearish on this until we break below 66,000 on the futures market. We have a lot of support in here, not only from two of our moving averages that are super important, but also a number of different price tests within this zone. So I think there is rock solid support at 66 right now, and looking for that to hold and for an eventual breakout. Whether we get that this week or not, we'll see. Not giving us a tip off on the short term on whether or not it wants to make a move, but I do see a little bit more consolidation here. I do see a little bit of more consolidation here and leading to an eventual retest higher. I'm going out to crude light. Crude light continuing to form up some support here. Hasn't done anything wrong necessarily, but not doing much right either. I think the story here is more on the weekly and monthly charts. So let's toss this out to a weekly chart. And you can see we are below our 9, 20, and 50 period moving averages. We need to clean that up. So I'm not super interested in a bullish trade until we get back above about 79.52. We do have our 200 period moving average coming up and acting as support under us. And if we drop this to a monthly chart, you can see we also have our rising 50 period moving average and our 200 period moving average clustered right here at around 30, at around 73.40. So as long as we can hold above 73.40, eventually I do see this resolving to the upside, and I am going to be bullish on oil once again when that occurs. But right now, it needs a little bit of time to clean up. Not super interested in it at the moment. Going out to gold, I think this is a cash flow chart. We are in consolidation after a monster run. It is no shock that we are taking a little bit of time off here at the high end of the chart. So looking for just stability here and eventually moving forward from there with resolution to the upside. But for the time being, probably doing nothing but cash flowing in the gold areas of the market. Going out to copper, bigger sell-off than I would like to have seen. We kind of went parabolic in a way here with just increasing momentum over the course of the last couple of months. That has finally reached a point where it was not sustainable. We are pulling back. I would love to see a week or two of consolidation down here around 450 and then a resolution to the upside. If we get 1 or 2 weeks off to consolidate down here and then eventually a break higher, I'll be really interested in that. But for the time being, a little bit too much volatility coming in and just not sure where this downward move is going to stop at this point. So that is off the radar. Coming out to natural gas, similar to copper, had this big exponential run, taking some time off. Looks to me like it still needs a little bit more time for development, so not super interested in that. Going out to Palladium, it is trying to hold on to support here, and I honestly am not too worried about a breakdown of support. It has been hanging around these levels for the better part of this year, and eventually I see this breaking and running to the upside, but the longer that we can just do nothing down here between $900 and $1,000 basically, the more this weekly 50 period SMA will creep down and converge down into that 1,000, 1,025, 1,030 level. And that would line up a really good multi-time breakout to the upside when this thing does eventually decide to move. So I'm really interested in keeping tabs on this. Again, not ready for anything this week, so not going to be doing anything in that area of the market this week. Going out to platinum. Platinum is more interesting to me, and I think the story here needs to be told on the weekly chart as well. We had this big ramp up. We've now pulled back and are holding previous support. The last time we did do this, it did resolve to the downside. But since then, on the longer time frames, if we put this out to a monthly chart, let's say, you can see we are starting to set higher lows over time. And this is looking back the last basically 2 years of data. So slowly building this base up on the longer time frame charts. Not super interested in it right now. If it came down to probably just under 1,000, I might be interested in scooping something up at that point. But for now, I think this is a stay away, wait for development, hope for consolidation going sideways for a little while with an eventual break above 1060. And then last but not least for our indexes and metals at least, going out to silver. Silver is in a wide range consolidation. Not sure yet if this is a double topping pattern or if this is just simple consolidation going back and forth. If we put this out to a longer time frame chart, you can see we did actually just break to highs over the last 5 years and are holding it as of now. If we can just hang out and do absolutely nothing here for the next week or two, maybe 3, eventually a breakout above 32.75 will start to get cleaned up, and that would look really, really good. Otherwise, I'd probably be looking for a pullback down into like the 28 to 28.5 level, somewhere in there, and some stability to form there before my next play in silver. Finally, since we talked about it earlier, let's jump out to UUP really quick and put this back to a daily chart. And on UUP, like I said when we were looking at the S&P 500, whichever way UUP goes from this, it looks like it is in a very crucial place where I could see a case for this breaking to the upside, and I could see a case for this breaking down to the downside. Like I said, when we were talking about our S&P 500 futures analysis, I could see a case for this going either way. I could see a case for it going higher. I could see a case going lower from here. It's going to be very heavily dependent on economic data coming out this week, and whichever direction this goes, I am anticipating the broad market going the opposite direction. So I have my 2 alerts set, letting me know if we get back above Thursday's high, and let me know if we get down below Friday's low, and whichever direction that goes, that's going to tell me basically, do I want to be a little bit more conservative, or do I want to be a little bit more participatory, I guess, for lack of a better word, in the market this week. So anyways, guys, I hope that helps. Enjoy your trading week ahead. Be safe. And like I said, probably another development week this week with not a whole lot going on the major indexes level. That is not to say that there aren't some really good looking chart setups out there on the individual stock level. So anyways, trade safe. Let me know if you have any questions. Take it easy, guys. Bye.